Many of you have been asking me to do an update about my favorite stock, which is Hims and Hers Health. This is a stock I've been talking about on YouTube since it was $7 per share. I keep trying to explain the company to people, and I believe I've been saying it more often, but this is really one of the most misunderstood companies in the market. People believe it's some kind of a GLP-1 company. It's a boner pill company. It has no moat, no competitive advantage. Anyone can create an app and get people on their websites, get a bunch of doctors, and it's just gonna go bankrupt. Amazon's gonna take over since it was $7 per share. Now the stock is sitting at $30 per share, and I still get the same exact arguments. And the stock's about to make a new high. Could be going to $40, $50. I think it's going to $300. And I own 8% of my portfolio in this company. And I still get the same arguments. So I'm going to try one more time to explain Hims and Hers Health to people who are open-minded enough to learn about one of the most hated growth stocks in the stock market. So I really hope you enjoy it. Again, if you do, all I ask, if you could please press the like button and let me know what you think in the comments. And this is a thread I did in January 1st. I said why Hims could easily double in 2025, $50 per share. And we'll see what happens. But Hims and Hers Health isn't just a GLP-1 company. When I bought it at $7, they didn't even have GLP-1. They had a dermatology business with hair loss. They're big in hair loss, acne, aging. This is over 80 million people in the United States. They suffer from, hair loss and acne. This is huge, guys. And those, companies like Hims and Hers, they're giving those things like the hairspray and the hair kind of pills for like $80 and $100 a month instead of people spending thousands doing traditional things at doctors. They're sitting at home, they order the prescription from a doctor on the internet using AI, and they give them the prescription. And it's just a beautiful business model, and a lot of people have been finding them extremely helpful. They have sexual health, 80 million people, especially amongst hers for women, and Hims and Hers Health. Hers is rapidly growing, and you see ads all over the internet. They're very good at advertising. You have the mental health business, over 100 million people in the United States. They suffer from mental health and anxiety, depression, and it's all now 100% online. You don't even have to go to doctors. You just chat with them on the internet. You fill out a form, and then you get your prescription. It's just amazing, and a lot of young people, they love that stuff. And Hims is a leader in telehealth and online healthcare in general. And of course, they do have the weight loss, but it's not just GLP-1. They also have, the oral pills. And oral pills have nothing to do with GLP-1, and they're like $80 a month. And for Hims, they're much more popular than $165 a month, which requires a 12-month subscription. So you would have to pay over $2,000 just to get the GLP-1 stuff. And a lot of people don't have $2,000, so they stick to the $60 a month weight loss oral pills, which is also extremely popular with Hims and Hers Health. So it's not just a GLP-1 company. The company has been rapidly growing in subscribers, over 2 million subscribers. It's been pretty amazing, 44% year on year. Revenue is growing 77% year on year. This is higher than most growth companies you're gonna see in the market. Adjusted EBITDA has been rapidly expanding, 12.7% EBITDA margin, and it's been increasing as well. Amazing stuff. Net income, it's GAAP net income profitable for the fourth quarter in a row. And it wasn't 75 million because they had 60 million and some tax benefit. So in total, it was 15 million, which is higher than 13 million on the Q2 and higher than 11 million in Q1. So it's heading in the right direction in terms of GAAP profitability. Most growth stocks these days, they're not even GAAP profitable. And the company is not decelerating in revenues. They're actually re-accelerating in revenues. And they guided themselves for Q4 of 2024 to be between 89 and 91%. And if you've been following the company, you know that the CEO is like the CEO of SoFi. They both always guide much lower. They set the bar low, and they always raise guidance, and they surprise analysts, and they surprise the market. So if Hims said 89 to 91%, it's likely going to be much higher than 91. Could be 100%, 105%. Again, they never ever, you could look at their record, they never ever missed any of the analyst estimates. So it's going to be very fun to watch the next earnings report. And Hims is much more than just a direct to consumer brand where anyone just goes online and you just get a prescription. It's really much more than that. And they have some very valuable data and very valuable technology. And now data, as I said, it's like digital gold, and you could monetize it to many different things. And they have a very important AI platform which tells them the dosage they should give to patients. And this is something that most people don't understand about the company, is that the company, and I don't have the chart, I could maybe put it up, they're focusing more on personalization. So if you fill out the form through the AI app of Hims and Hers Health, and you fill out, certain side effects you get from drugs, maybe, it's something that irritates you, or maybe you lose your appetite, or whatever it is, you fill out everything you feel around drugs and anything you feel in general. And then the system that Hims owns gives the doctor a special, compounded version, not just in GLP-1, but also in terms of the oral pills that will help you reduce the side effects of the drugs. This is the part that most people don't understand about Hims and Hers. They believe you just go on the website and you buy whatever hairspray or whatever oral pill that they sell at CVS or they sell whatever. This is not true. They make it just for you. They give you a combination that helps reduce the side effects of those drugs. And that's why a lot of people are using Hims and Hers Health. And that's why I said that Hims is an AI leader in personalized health treatment. It's profitable and it's trading at a discount to a stock that people are following into that's called Tempest.ai. And you can go and watch the video where the CEO talks about how they're using AI to do that stuff. And now I want to address, the elephant in the room. And this is the main worry that most people have. And this is why most people, they don't own Hims and Hers Health. They're waiting for the perfect moment, for the perfect time. Whenever the GLP-1 gets taken off the shortage list, this is when Hims is going to crash 50%. And that's when they're going to enter the position. And that's what I'm going to talk about. And there's one main reason, almost, why, Hims and Hers is so volatile. Why the stock goes down 55%, then it goes up 100%, then it goes down 34%, goes down 47%, goes down 30%, and then it goes in and makes a new high. And I believe we're heading for new highs right now, with Hims and Hers Health. You can see the pattern, it's been pretty predictable, higher highs and higher lows. It's very volatile, and not everyone can take the volatility. But this is, for one main reason. For one main reason why Hims is trading at 3 times sales, and other stocks like Palantir are trading at 50 times sales. For one reason why Hims is trading at 32 times forward earnings, and a lot of the hyped up growth stocks, they trade at 100 plus times earnings. This is one simple reason. And this reason is the whole thing about GLP-1. Because Hims is selling the GLP-1 injection, which is a compounded semaglutide. I believe this is how we pronounce it. It's not FDA approved. Now, the main reason they can sell it is because it's on the shortage list. So the semaglutide is on the shortage list. If it's on the shortage list, Hims can sell a compounded version of the semaglutide on their own website without it being FDA approved. And the worry is that whenever Hims or whenever the FDA takes it off the shortage list, then Hims will no longer be able to sell the GLP-1 injections. And how will the growth look like after GLP-1? What will happen to the company? And people believe it's just a GLP-1 bet, so they're skipping it. And this could not be further from the truth. And there's a lot of contradictions around the thesis that Hims can no longer sell them if it's taken off the shortage list. Because there's a few tricks around it. And one trick that I'm not too sure of, and I'm going to read some things, and it's mainly the whole thing with personalization. The main reason why Hims has been putting those customers under a personalized plan is because there's some kind of exception from the FDA where Hims can continue selling the GLP-1 if they're, toned in a way where it's made for the patient. If it's different from the traditional big drug that those big companies are selling, if it's different from it, then they can sell it. But if they're just selling a copy of it, then they can no longer sell it. And there could be some kind of way where Hims could potentially keep selling it, even though it gets taken off the shortage list. And this is what the app says, and it's something that's pretty knowledgeable. And it says under section 503A, pharmacies can compound drugs. They are not essentially copies of the approved drugs, so they have to be different. If semaglutide is no longer on a shortage list, Hims would need to justify compounded versions by demonstrating such differences. This might include altering the formulation in a way that provides a significant difference, like removing allergen or introducing a therapeutic ingredient not present in an FDA-approved drug. So if they want to keep selling them, they can keep selling them under a personalized plan as long as they tone it in a way where it's different from the big drug. So they cannot be selling a copy of the same drug anymore. They have to tone it down a little bit. And Hims does have the capacity, they have the pharmacies with the latest acquisition for them to be able to do that stuff. So they might be able to get away with it. And this is something else. It says Hims operate under both 503A and 503B rules. If semaglutide is off the shortage list, 503B facilities can no longer compound essentially a copy of the drug without a shortage justification. However, 503A pharmacies can still compound if they meet the criteria for individual patient needs. And this is why Hims is focusing more on personalization. So again, don't quote me on this because I'm not an expert in those laws and I'm not an expert in pharmaceuticals, but I believe the management isn't dumb enough to invest billions of dollars, or I should say hundreds of millions, in a drug that's just temporary if they don't know that there's some kind of way to keep it permanent. That's just my opinion. And this is something else. Hims has indicated they might continue offering GLP-1 medication through a personalized subscription, which would fall under the 503A exemption, allowing for compounding even outside of a shortage scenario. Formulation changes and a discretion of healthcare providers to determine the need for such modifications. So Hims might be able to get away with it, and it might shock the market, and the stock could get a massive multiple expansion, but maybe not. But for me personally, I'm not too worried about it. Because if you look at Hims growth before GLP-1, so from 2023 and before that, Hims grew 80%. 82%, 93%, and 65%, way before GLP-1, just from the dermatology, from mental health, from sexual health. Those markets are 100 million people plus. They're huge. Hims does not need GLP-1. And they also have the oral pills, which do not depend on any shortage list. They are $65 a month, not $100 up front, that a lot of people just cannot afford to pay in the United States. So to me, I'm not too worried. But this is one of the reasons why, a lot of investors, they keep selling the stock, because as we get close to the, deadline of FDA to announce if it's going to be on the shortage list or not, investors and institutional investors, they start selling the stock just in case it gets taken off. And there's the uncertainty of how Hims will look like in the future. But once this whole story is over and there's more certainty about the future of Hims and what they can do beyond, the shortage list and GLP-1, then the stock should be trading at 10 times sales minimum in this market. Duolingo, if trading at 10 times sales. If Hims was trading at 10 times sales, it would be trading around $65, $70 per share easily, and that's just the market we're in. But I'm not counting on it. I'm just counting more, over the long term with the company. And if you look at the market in general, in terms of telehealth, it's expected to reach $460 billion by 2033. This is massive growth. A lot of that stuff is moving online. And I would not be surprised if it ends up being much more than $460 billion by 2033. Okay, and I know the main argument about Hims is, what about Amazon? Amazon is coming in, it's going to take over the market, it's going to do all these things. Again, I don't believe so, because Hims is offering a personalized product. Most of those companies, they're just selling whatever is on the counter. They're not offering a personalized subscription to the patient that adheres to their side effects, that connects with them. This is why a lot of those customers, they keep coming back to companies like Hims and Hers Health. Okay, but let's just take the 460 billion and assume that Hims only get a 5% market share. I believe that's fair. They could, in my opinion, they get 10-20% market share, okay? Because there's one of the first people to win it, first companies. So, but let's just take 5% to count for the Amazon risk and everything I get in the comments, okay? 5% of the 460 billion is around $23 billion in revenues. Okay, and I used a few different scenarios. I used 2 times sales, 3 times sales, 5 times sales. Now I showed you HIMS right now is trading around 3 times sales. Okay, 3 times sales for HIMS. SoFi is like 6 or 7 times sales. Duolingo is at 11 times, and Palantir is like 49 times. And none of those companies are growing 91%. None of them. That's just the truth. And HIMS has so much potential. But let's take this 23 billion. And we take 2 times sales, 3 times sales, 5 times sales. 2 times sales is $46 billion in market cap. Okay, we divide it by the current market cap of 6.7 billion. This is 586% on the upside from now to 2033. If we do 3 times sales, which is still cheap, so the same multiple, and this is 69 billion, we take it off 6.7, this is 929% on the upside from now to 2033. And if we take 5 times sales, which is still much lower than what a lot of companies are trading at, I had to correct a few calculations. This is $115 billion in market cap. We divided by the current market cap of 6.7 billion. This is 1,616% on the upside on the best case scenario. Worst case scenario is 586%. But of course, this is, again, a risky company. And I always say, do your own research, implement the right position sizing. It still has a lot of short interest, 29.4%. Again, I believe they're betting on the short-term catalyst of the GLP-1 decision from the FDA. It could cause the stock to go down, maybe, or maybe it's priced in because it's so obvious that everyone knows it. So I don't know how the stock will react. But a lot of short interest, risky company, growth stock, it's always risky. That's why I have 8%. A lot of people tell me, why you don't have more than that if you're so confident? I know this is not Google or Amazon or Microsoft, guys. This is a growth stock that could work out and it could not work out. So as the company grew, I'm up like 280% on HIMS. I started buying in the $6 range, $7. And I'm still holding my shares. And I even bought at $21. I've been averaging up. So I feel comfortable with 8%. And, you don't need much to make money with HIMS if you're right. And it goes up 1,600%. But if you're wrong, then you don't lose too much. And this is the best part about investing in those growth companies. And this is all I had to say about the stock, not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.